So hello, this is Trader Travis, author of the best-selling book, Option Trading Made Simple, and I am proud and honored to be the 2019 U.S. Investing Champion for the Futures and Options Division. And so if you're new to my 30-day challenge, I am on the tail end of a 30-day challenge where I'm sharing with my community as a way of thanking them for helping me win the championship by giving me accountability, by giving me an audience, because this is my art. I love sharing my passion for investing with you. But without you, I probably would be lazy and not, pushing myself to become better each and every year. And the results of that is me winning that investing championship. So I want to say thank you. This is my way of saying thank you by recording these videos for you. Now, in today's video, which is just for educational and informational purposes only, right? Please seek qualified investment advice, right? Basically, I'm going to teach you and show you a simple path, at least in my experience, of beating the market. The thing that the experts say we can't do, and we shouldn't even try to beat the market. We should just settle for simple average buy and hold return. As my 4-year-old says, tink, tink, tink. Do I want to teach my kids to be average? No, I want to teach my kids to be above average. If they fail, then they might fail back to being average, but I don't want average to be their goalpost. And so in today's video, I want to show you a simple path I've discovered to beat the market average. I hope you enjoy. Okay, so really quick, I want to just talk about how they talk about the average buy and hold return. And there's nothing wrong with that. I'm not saying, I used to be a bigot. I used to make fun of people who were settled for buy and hold returns. I am a little bit older now, more mature, and I see the brilliance in buy and hold. It is a simple passive strategy, but it just has some downfalls where, you have like 40 to 50% drawdowns during a market crash. But I want to start with the average. They say buy and hold average is 7 to 9% a year. So this is just an example of if we earn $10,000 and we earn 7%, in 20 years, it would be $38,000. And so they say we can't beat buy and hold. And what I, as an active trader, an active option trader, is saying is, hey, we don't have to double our account every year. Just settle for a conservative strategy that adds a few percentage points to your return each year. And so if you add just a 5% percentage point now, we're talking about the difference between 38,000 and 96. You've almost doubled your ending value just by adding an extra 5% each year. And that is not that difficult. And I want to prove it in today's video. First, let's look at, that was average, right? Let's look at actual returns. The actual return of SPY, which is the ETF of the S&P 500 for 2019, is 31%. So that's our benchmark. That is what we are trying to beat every year, even on the down years. So 31%, that's our target. Now let's use the software I use, which times entry and exits. This is timing the market. That's voodoo. You can't do that. You can't time the market. Anyway, if you have the right software, let's come out here and let's show you that. Don't believe a word I say. Let me pull up, 5-year chart here. Let's look at these entry and exits. The red monthly trade triangles tell us when to get out. Did we, avoid this carnage right here, 2015? Yep. Tells us to get in, get out here. We lost a little bit of money. Get in here, get out. So yes, do they always work? No. But if you just casually look at them, do they, especially here, this ugliness at the end of 2018, it kept you out of that. Yes, you missed some of the run up, but it kept you out of the ugliness that would have stressed you out. And you would have got back in here in February of 2019. And as of now, we have not received an exit. So what I am looking at here and profiling is this signal right here on 225. So now that we talked about that, let me move on to my book here, Option Trading Made Simple, because I'm going to show you the results of the strategy taught in this book. Now, I'm just showing you the results. I'm not going to teach you the strategy. You would need to grab the book to get yourself familiar with that strategy. And since I'm already on Amazon, I just want to remind everybody, I am helping my friend who's really been supportive for me. He wrote a book called Choose FI. And anybody who purchases a book and forwards me a copy of their receipt, I am giving them either $100 off the enrollment for the Success Academy or a bonus training valued at $100. And that's the 2 bonus trainings. I've already released them for people who've already bought the book and forwarded me their receipt. The 2 bonus trainings are my insurance training, showing how I insured my mom's TSB, 401k, IRA accounts, those traditional retirement accounts that people say you can't buy insurance for, how we use options to protect those. and then also a video called the 100K tax loophole, showing how a guy made 100 grand in the stock market all tax-free just by using what's in the actual tax code. So that offer is only good into January 30th, 2020. So again, if you just purchase a copy of my friend's book, forward me your receipt before midnight, January 30th, 2020, you can get either $100 off the enrollment of the Success Academy or $100 bonus training. All right, end of commercial. Coming back here, option trading made simple strategy. Let's come to my Word document, and we're going to start with $35,000 account. Remember, our target is at buy and hold return of 32% in 2019. That is what we are trying to beat. So we start with something called a stock rental strategy. Let's see if I have my broker account pulled up. Yep. So the stock rental strategy, if you've never watched any of my other videos, it is traditionally called covered calls, but when I'm teaching, I taught my 10-year-old and 8-year-old how to trade covered calls. And if you say covered calls to an 8-year-old, they're like, what are you talking about? So I was like, hey, you remember our 8th Ave, rental when we rented out our house to someone, we brought in income. See, they get that, right? They've seen the house, they've helped us clean it. So they understand renting out things. Well, the stock rental strategy is just like that. It's called covered calls, but it honestly is. If we bought this stock here and then we sold this call, forget it. Again, keep your thinking on the surface level. Even if you don't understand options or covered calls, this is literally how I teach my kids, right? So we can buy this stock at $279, just like we bought our house for X dollars. We can sell this contract to somebody. It's a lease purchase contract. It says that it gives them the right to buy our stock from us, for the next 39 days if they want to. If they want to buy their stock from us, they can for $280. We bought it for $279. We can sell it for $280. So we'll make a small profit, but we're not after the stock profit. We're after this. We bring in $392 immediately in our account. If I click this button and I hit sell, $392 would immediately show up in my account. That's rental income. So at the end of 39 days, that person has a decision. Do they want to buy my stock or not? Right? If they choose to buy, great. I sell my stock, but I still get to keep my rental income. And then if they don't, then I keep my stock and my rental income, and I just rinse and repeat. All right, so that's the stock rental strategy. I just want to give you a quick rundown of what that is. So just doing that once a month for about 10 months out the year, and the reason 10 months is because it's hard to do it every single month. Anybody who's ever done that strategy it never works out perfectly, picture perfect like that, right? So in these examples right here, I just simulated, hey, us buying that stock and renting it out each month, it brings in about a 1.4% return on your cash or your account each month. So that's 14% a year. So buy and hold is 31%. We only earn 14%, doing the stock rental strategy. So how can we make up the difference? Well, that's where we come to, again, the strategy taught in my book, Option Trading Made Simple. We buy a simple call option. Call options are like buy and hold. We buy something for a lower price. If the market goes up, we sell it for a higher price. Calls make money when stocks go up. They just do it at an accelerated rate. For example, on that same day where we bought the stock, we also bought 7 leap calls. A leap is just a long-term call option that expires about a year out. And so we invested $4,000 in call options. Then we sold them just at year end, right? And it brought in an $11,000 profit or a 32% return on our $35,000 account. Now, I want you to pay attention to this. This $4,000 right here, we only risk 10% of our overall account. If we just use this one strategy, 90% of our money could stay safe in cash. If I left 90% of my money in cash, which I did not, but this shows you how you can still get the buy and hold return. And so what a person could do is combine this buy and hold return plus their covered call return, and that is 46% in 1 year. And that, my friend, satisfies us beating the market. 46%, but not only that, here's the most important. We get growth and income. See, with buy and hold, you get growth in income. Your measly 2% dividend, well, it's not measly, it's passive income. I won't make fun of it. But you mainly get growth with buy and hold. Here, we get growth and income, and we're in control of that income. We literally, now I will say it, we click buttons and cash shows up, which is true. It's passive income. So not only did I get the buy and hold growth of 32%, I have 14% in passive income on my account each year. And I literally do click buttons. It takes me about 2 minutes, show it once a month. So again, you get the buy and hold growth, but all in addition to that, you also get income. And that income is really nice for a person in retirement. They can still watch their account grow, but click buttons each month and bring in their spending income for the month via this stock rental strategy, also called covered calls. So I hope you enjoyed today's video, and it shows you the power of what happens when you reject the buy and hold dogma of you can't beat the market, you can't time the market. You know, it's part of a downfall and a blessing that I'm hard-headed. You know, I like to prove people wrong, and you know, all my life I was told I'd never be anything, right? I'd never amount to anything. I'd probably die in my 20s. Here I am, financially independent in my 40s. And so, you know, it's just a habit of mine now. When people try to speak negatively in my life, I just reject it. And so when people tell me I can't beat the market, you know, I'm always saying, I just refuse to believe that. So I was like constantly asking myself, how can I beat the market? Not only that, because I've been bankrupt in real estate, right? Failed as a real estate investor, I have an aversion to losing money. So the question is more likely, how can I beat the market in a conservative manner so that I don't lose a ton of money, because I'm allergic to losing money. Going bankrupt gave me a superpower, and that is I'm kind of allergic to risk, losing a lot of money, right? I don't want to go back there. So now everything I do is like, okay, how can I beat the market? How can I get these market-beating returns but low risk? And that is why, despite a lot of gurus poo-pooing on my insurance concept, you know, buying protective put options, you know, they're like, oh, it doesn't work. It eats into your returns. Okay, you can listen to them, but I guarantee you, right? Follow me in the next crash. I will be one of the few people who do not lose a ton of money. As a matter of fact, my goal is either break even or get a small return on my account, like 5%. So if the market falls 50%, I'm not looking to double my account in a year where the market falls 50%. But if I get a 5% return when everybody else lost 50%, I would consider that a success. So this video is way too long. So you take care, and I'll see you in the next training. Bye-bye.